Hey everybody, this is DayTraderRockStar, and this is the high probability watch list for the week of May 2nd. A great list. I've been here all day Saturday, and I continue on this. I'm going to start kicking this thing off. We have a lot of stocks to go over going into next week. Review of this past week, and just basically to get back on track. The last couple of weeks, including this week, I got the watch list out a little bit later. Normally I get it out on Fridays, but I had family stuff going on, so I am here in the office today, and I've been doing a lot of research, and a lot of interesting things have come to my attention. But we're going to always start off with the S&P cash chart just to give us an overview of the market. It's kind of a market radar. And, a lot of people looking at this, it's an interesting scenario. We're very close to the highs. Yeah, each time we've gotten up to about 3% away from the highs, the market has returned and moved down 10%. So we're kind of right in that same level, and I've actually got a little trend line here that represents that. I'll make it a different color. I'll make it red so you can see a little bit better. I'm going to get rid of this one and delete that. So you can see this top here, this top, and we're kind of chopping around this top. And plus, we even had a little candle up here. And we're going to talk about more. We're going to talk more about candles in a bit. So we're running into this level, and it's expected to get a little pullback off of here. Now, a lot of people are saying, all right, we can even pull way back down here. This has been a great run here. This was a big divergence run off of the daily, big candlesticks, and a nice run. So a retracement back into this pattern, a retracement back into this whole move, a 50% retracement, wouldn't be out of the question. That's a lot of people will be looking at that. We have the daily stochastics here kind of generating that rollover and starting to push down, and it means that our bigger time frame trend is pushing down, and we pay attention to that to make sure we're on the right side of the market. So we also pay attention to that 60-minute time frame, and then when that 60 and daily are on the same time frame, we want to be in that. Really, that's the golden sweet spot when you have that combination of multiple time frames lining up. So as you can see, each one of these round circles represents buy signals. Each one of these square areas represent the overbought levels. So and the majority of the time, even if you do get sometimes an embedded stochastic here, this one has already started to rotate back down. And lots of times you'll get that full rotation. So we're a little cautious because of that daily time frame. But there are some positives here. The positives are we're so close to the highs, and there's been so much talk about what's going on with the Fed and the interest rates and stuff. The market seems to be absorbing all this, and it seems to be, climbing that wall of worry. Everyone's expecting a rate rise, maybe a couple this year. And the market's been taken out in stride. What I find interesting, I like to trade, is the 60-minute time frame a little bit better because it gives us more of a quicker rotation. We get better setups. The daily here you could have a downward day and then a pop and then a follow through to the downside. So it all depends on the bigger trend, but that 60 is a smaller trend, and we trade that a lot. Lots of times you'll see that flag and that oversold. We could actually trade inside of a flag and understand the bigger direction. So right now we're oversold on the 60. And I was out of the market the last 2 days, so Thursday and Friday, and we've been seeing some sell-off here. So this is a day that I wasn't really a part of this. I was holding some of my positions. And, I actually see the move down. We had a little bounce on Friday right at the end of the day, but not much here, but enough to get us back from an overbought level back down to an oversold level. And that's fine. You have a nice divergence here. The first rule that we apply when we're trading the markets is, and this is something that we have to always kind of just drive home because it's important. That's what makes discipline, that's what makes us disciplined. Is just, understanding a rule and abiding by it instead of guessing. And one of our rules are, if we do see an entry, a buy signal, be it a divergence and stuff, that buy signal or that market here has to be examined when we get to a full rotation the opposite side, because the market goes in these swings. You get oversold to overbought, to overbought, to oversold, to oversold, to overbought. So being up here on the 60-minute time frame, and on the daily, right at this point, just a few days ago, we had a multiple time frame short signal. And you have a better setup for a breakdown. So seeing this breakdown, it's not the worst thing in the world to see this. Now, how do we work off of this? Well, we have this little, you have a pivot area here, and the pivots are where this market makes a pretty decent turn where we could actually see a change in direction. Here we have one. This was that old divergence on the 60-minute time frame. And I could say, all right, here we have a pivot area. Here we have maybe a possible pivot area. We have a little candlestick back here. So right now I'd be, starting to work off of this level. Now it's not the best candlestick. Right now we have this lining up. But lots of times you'll find that little candle, that little tail, it means something. And we're going to just connect those two here. We're going to just connect that to that pivot area. And the price actually came down to that level on the 200 period moving average. So it's interesting that we actually got down to that level. And we call kind of a lower channel line bounce, and we bounced off of this going into the 60s. So right now we could actually just pay attention to this. If this seems to have kind of gets a little choppy here, we're not saying that this is our first pivot that we want to work with. This is probably definitely a pivot I want to work with. There could be down the road we might start to look at something like this, and when we have some of our lines lined up here, we could start to put together a channel and start to wait and react to when these prices hit these channel lines. So we're in an interesting zone. I like that the 60-minute time frame is oversold, but I'm liking a lot of the stocks that are setting up lately. So even though I understand the pullback is there, I don't expect a big pullback. Do we get back down to 2,000? I don't think so. Honestly, I think this flags out when we push higher and we take out the highs of the session. We look out on let me see if I'm going to look out on a monthly. Yeah, I'm going to look at the monthly here, and you can see this is a long, and we never look this far out. But when we start to look at this monthly chart, I want to get rid of some of these lines. To kind of make it clear. These are all superimposed on the different time frames, so I'm going to have to start fresh. But I think it's important to start to see, what we're dealing with. We're not dealing with the end of the world here, and things might be accelerated in the market. This has been a nice pullback, the 1999 to 2002 bear market, then the 2008, 2009 bear market, and now we have this pullback. And we can see that the monthly is rotating back down, but we're organized, and this is actually part of a pullback in a larger, bull market, a big, long, drawn-out bull market, which is probably going to continue to move back up, and eventually be over 2,500, and eventually, continue to move back higher and higher. And we just have to manage our areas where we find that it's the best possible area to get long or get short. Try to take these trades in the direction of the biggest moves. So we're going to kick off on a lot of stocks today. And, not all of these are going to be HPS setups. So what I did today is, because I had to catch up on all my research, I wanted to make sure I did a good scan of everything. I broke back down into my old basic research method where I split my paper into multiple sections, and I write down I go through my HPS watch list, and I'm going to actually post that for you guys also. It's about 200 stocks that I scan. And when I look on these things, I'm looking for what I call HPS plays. I'm looking for divergence setups. I'm looking for wedges or channels, flags, shorts, trend line touches, and future setups. And I have these all broken down. I'll explain more about that. But again, there's your daily. A nice flag. We have an interesting candle here. It's not a bad candle, and that's the other thing I wanted to talk about. You're going to make most of your money in the market only on a small amount of the days, a small percentage of days throughout the year, and it's important for you to wait for those days. Now, there's certain little signs, key indicators that we can look at that tells us, hey, this is an important thing. But the hard part of is being in front of that computer every day and not seeing that. But when we look back and we can actually say, all right, what's the common denominator on a lot of these moves, the bigger moves or the bigger tops? Well, of course, our momentum indicator is very important. We get the biggest moves when they're oversold or overbought, and we get those nice moves. But also these candles are very important. So during when you're looking for a pullback or you're expecting maybe a bounce, maybe it's because of that 60-minute time frame, you're expecting that bounce. and you see a daily candle start to show up that looks like it could be a pivot candle, you want to pay attention to it, and that's your best opportunity. It works great when you have that pivot candle lining up with a stochastic rotation. Here's an engulfing pattern. Here's a big hammer. We have a lot of these candles that are big tails, these shadows that hang down. They flush it out. We have divergences that we look for. So there's certain things we look for. And there's good times to trade and there's bad times to trade. And that's the important part, So the stocks you're going to see now, even though the market might be, in between time frames, we have a good 60-minute time frame, but a more of a bearish daily time frame. But the overall big picture on the monthly is like, all right, if I was, going to sock away some money, yeah, I feel comfortable putting the money into a quality name, Disney, Procter & Gamble, Philip Morris, something like that, and letting it ride. I have no fear in that. It probably is a good time to do that. But if you're looking to trade going into next week and try to make some money, that's what we're going to do right now and take a look at some of these stocks. Now remember, that 5-minute time frame, we didn't touch base on that too much. The same thing. You have to have that time frame in your favor. If you're just looking at a regular trade, and you're going to do a scalp in the market, be it, you're going to try to trade off the S&P, you're going to do some S&P options or the SPY, common ETF shares, or anything that tracks that, it's very easy to understand where you are. And, if the trend is down and you're embedded and you feel that weakness, stay away. If you start to see a divergence, then you can play that divergence. But if you want to, if you're set on going long or going short, so important to at least have the wind in your sail. So if you're saying, all right, I want to take a bounce here, don't take a bounce when the 5-minute stochastics is already up here and you think it's starting to run away. You might have a nice little breakout here, or you might, whatever, and you might get a nice little run here when you break out. But I'm saying when you're looking at it and say, all right, I broke out here, let me not pay attention to this. Lots of times you pay attention to the stochastic, you're going to see a nice rotation if you're overbought. Just try not to go against the extreme levels. Try not to go, well, it's going to break down here, but you're already oversold. I want to go short here thinking it's going to break down. Well, the momentum here shifting back up. We can move back up, and now, you're just going to fight the tide. You don't want to fight the tide. So, to finalize the market radar going in today, I do like that 60-minute time frame. I like that we're on this lower trend line. I do expect higher highs down the road. I wouldn't say I'm extremely bullish going into this week. I could see a little bit more downside and chopping around and trying to get this down a little bit lower. But if we actually start to turn back up here and we have a nice bullish day, this flag here, I think a breakout of this flag is going to be, that's going to be the signal that we're going to probably attack those highs again. So, which is right above us. So it should be an interesting week. Also the beginning of the month, April 2nd, the beginning of the month. This first week of the month also is going to bring the jobs report on Friday. So there's going to be some other things that could move the market also. So we're going to start off on, let's just take a look at review some of the stocks. We got, like I said, I have a lot of stocks, and I apologize right now. Hopefully this video is not too long for you, and you can just gain what you can from it and discard what is not useful for you. All right, so we're looking at back at the beginning of the week. We ended up starting off on Kohl's again. Got back in on Kohl's because of this flag, and the flag worked out great. Everything started to work out great. We understand we had the momentum moving up higher. We had the breakout, and then on Friday, I wasn't here yesterday. We got a smackdown, but I noticed we got a smackdown across the board. Like Wal-Mart, the retail really got hurt on Friday. So the Kohl's also got hit. It's going to be interesting to see how these things set up here. We need to regain some strength. This was okay. It didn't really get affected. It didn't really roll over, but it still does not look great. I mean, if we could regain that candlestick, I think that's an extreme bullish situation. That 45.50 area on Kohl's. If you're not in it yet, and I'm going to put it down as one of our alerts, KSS, 45.50 would be a buy trigger alert. Or break anything back above that candle, this candle that happened on Friday. We're going to be watching it closer and closer. It's extended here, but that's something to be a little bit nervous about if we start to roll over and gain some momentum. The base is really nice, but it's not moving. I am long those. I got in that. What was the price there? I'm looking back here. I got the June 17 45 calls. So I'm happy with that. I'm very happy with that. June 17 it gives us enough. Gives us over a month out. Just to get this thing back above 45, I'd love to see that. If we start to break down further, might get rid of it. It's not. It's expected to see better things out of this flag, but whatever happened on Friday, we're going to see if that gets reversed, and if that does get reversed, then all hands on deck. This might be one of the best bets going forward. It was pretty light this past week. I did get into some earnings plays the week. Was it this past week? I think it was this past week. The Apple AAPL, that did not work out. It was a gamble. That broke down. And, again, that was a gamble. The AKAM, that did work out. We got a gap up, and we actually took it off on the gap up almost right at the high. So I was very happy to scale out because take a look at this reversal that we had on all these stocks over the last couple of days. So we actually made money on that. Didn't make the money on the Apple, Capital One Finance. Down on this. It was a gap down. It's chopping around. I don't know if we're going to have time on this. I'm double checking where I'm in on this. I don't have my platform up in front of me, so that's why I'm just looking back on my alerts. I'll bring it up. Anyway, that kind of gap down there. And then we had, again, the Micron. We took the Micron off for a nice profit. The CSX, I like it. It started to push a little bit higher, pulled back a little. It's still choppy. Not much is going on here. Again, you have to, in my case, I actually bought into this a little, going against my normal routine where you want to be careful when you get extended here because you have that little pullback happening. Looking at more of the bigger picture of this trend breakout and holding that 200-period moving average. It's not not an HPS type of zone right now. The interesting one going into this week, and again, I have a lot of other stocks. This is kind of a review of some of the positions we got into. The NCR was that short we were in, and the short was based off of a divergence play, and we ended up catching this nice breakdown. So it worked out great. We got $1 on the trade. Worked out great. Sold our puts, sold our short common, and just left it there hanging. So this had a divergence bottom and a divergence top. We were helped by the earnings. And the earnings actually were fine, which was fine. The earnings actually gapped up and it just sold off, which is, classic earnings. But we got out of that nice profit there. That's NCR. Started taking profits in Brinker, EAT. This was and we're going to go over this in a little bit more detail. This is really interesting. Now, we've been in this trade off of this gap down, and we said this is going to be a divergence setup. First of all, it's coming back to the important underlying pivot area. And I bang the table all the time. When you establish yourself with an early channel line, be it a lower channel line or a lower trend line, just as important as the top. Just because you don't have anything that makes it perfect on top, this is perfect. 2 lines, 2 points make a straight line. You tag it again or get real close to it. You find out you gap around it. How a candle closes around a trend line is important too. You could violate it and break down through it, but if it closes back on it or above it, it really does hold it. And this is what happened in this case. We kind of violated, closed right on it. This one we broke down, closed above it. This one we tagged it perfectly. This one we broke down and closed right above it. We came right down close to it here, tagged it, and we tagged it once again on the gap down, and that's why we like this. Because the gap down, and we started to turn back up. So that was our classic divergence setup. So a nice divergence setup. And it does still have the power to push higher. I do think that we can actually get through this downward trend line, and I was always banging the table on this. So we're just taking, trimming partial profits into this. I sold 5, made 20 calls, 45 calls on that, and I still have probably about 7 left. And then we sold the Micron, and then I started picking up, I did buy a little CMG down here. And I think it was, the daily's oversold, the hourly's oversold. I'm curious on it. It's kind of a long shot. I want to see if we start to turn back up and break out of this channel. Remember, we trade lots of times we trade these channels and stuff. The gap down, it's not giving us a divergence or anything, and it's not an HPS type of setup. So a couple of those, just wanted to update you on the recent setups. Now we're going to go into a little bit more detail on these stocks. I want to break them down into each category. I'm going to try to find a way of actually sharing my notes with you guys using Evernote. So just a couple, you're going to see a lot of these stocks, and we're going to go over what type of setups they are, if they're okay now, or what when they will be good, and if they aren't, just to kind of remember what they look like and get a little education about it. So let's start off with ECL. Now ECL is an interesting one because we have this channel line breakout. So what I like about this is that the first time this rotates all the way back, it's not set up yet. But when that comes back down into this oversold level and this pulls back, we're going to start to put things together. Maybe it pulls back to an underlying trend line back here. Maybe it pulls back to this trend line back here. But, we start to kind of stalk these trades. It's not like what we want now. It does look kind of strong. I like this. This was actually a nice flag breakout. But I can't force myself to chase at this point. But I have it on my list now in my notebook, which I scan back every couple weeks. And I look at the ones that are setting up. I also have a section which mean these are setting up. And I put that one in that section too. And it tells me to go back each week and look at it, or each day, and see where it is comparable to where I would like to get in, and where we want to be able to really take advantage of this. So that's on the to watch list. All right. Here are some possible divergences. Here we have Thomson Reuters, the news, publishing the news. And this looks like a running divergence, but these running divergences typically eventually break down. So we can actually start to look at this as maybe some kind of a wedge pattern, topping pattern right now starting to develop. I don't know if it's my favorite, but because we've seen this pattern play out on recently, KMB, you guys didn't think KMB was going to work out, but boom, goes the dynamite on that. And while we're talking about KMB, if anybody's still short here, you have that underlying 1, 2, 3 channel right underneath us. There's been chatter that Anderson Cooper was going to do a spot on 60 Minutes on KMB fraud, some kind of fraud on 60 Minutes. I cannot confirm that, but if it does, then I'd watch this 121 level, and probably that would be a buy off of that trend line. So something that might be setting up. Let's go back to what we were just looking at, TMTRI. So a nice rising wedge pattern, divergence. Typically this breaks down. Another possible divergence here. We went over the EAT. EAT, lots of times you'll see that divergence start, and here's another good example back here. And I think this video is going to be excellent for educational purposes anyway. Whenever you have that low, bounce, and a quick spike or a gap down low, and we cross back up here, that tends to be the bottom. That happened there, and it happened here. And we'll see these setups over and over again. That's why we just wait for them to happen. And when they do, you got to strike. And it's almost like you want to just keep the powder dry until you get that, But I know that's not the easy part of trading. Staying out of the market is the hardest thing because you're always trying to look for that opportunity. But there is better opportunities in this market. And there's high probability zones that you have to wait for. And when you have them, it's my job to get them to you, And you know what? From this point on, you're going to get them because I got no distractions in front of me for the whole summer now. Well, not for the whole summer, but everyone is gone. in the office. We're going to be doing overnight shows again, some nighttime shows. We're going to be always breaking down this market. This is what I dream for. You know, this type of gap down, quality name, divergence setup. You get a nice run off of this. Very easy trades. All we have to do is wait for them. All right, Dollar General. The gap up and the pullback. And the pullback here, lots of times you'll get a channel or a wedge pattern. We consider them usually the same. It's usually you have one good straight trend line underneath us on the falling wedge. And you want to buy that. And you can see the higher low here. Very obvious, higher low and the lower low. So you have the lower low. From here to here. And then we actually came down and put a double bottom in right there. So that 79.85 area would probably be a good stop on that. It's actually kind of a gap area at 79.50. 79.50. Not to say we can't get down there, but I've seen this roll over one more time. But it's an interesting setup for me. I'm not going to be in this one. You know, I have better fish to fry. I have a great setup for you guys coming up next. And this one's not. I mean, it's good, but I would, again, I'm always more comfortable when we have multiple indicators lining up, not just a one trend line, but I like to have that underlying trend line. I like to have that divergence. I like to have that rotation. X marks the spot. There's a lot of levels that we want to pay attention to here. This is okay because we have the divergence and it looks bullish. But I'm going to pass on this one.